Hello, everyone, and welcome to Red Threads. My name is Ana Maria Martins. I lead the short-term crop teams for S&P Global Energy. I'm here joined by Mary Kate Scrubs, our corn lead analyst, Jack Lerman on the soybean complex, and Aaron Gertz on North America wheat. We are here to discuss our expectation for the upcoming WASDE report from the USDA, the U.S. Department of Agriculture, which is scheduled for February 10. I'm going to get started with you, Jack, because the soybean market has been waiting for the approval of the 26-27 RVO, the renewable volume obligations, which may impact USDA's number on the soybean crush. What is your expectation for this report?
Yes, so on the soybean oil side, the market has been anxiously awaiting indications on the 2026 RVO. It's very important for U.S. soybean oil domestic demand as it mandates a minimum biofuel production for the country, and biofuels demand quite a bit of vegetable oils, specifically soybean oil. So while we do not have information on the RVO quite yet, there was rumors this past month that those indications will come out near the end of March. And given that those indications are not out yet, we do not expect them to have an impact on the WASDE report. That said, there could be some changes to the soybean oil demand forecast from the USDA due to the recently announced US-India trade deal, which could see more soybean oil heading to India at the expense of domestic use in the US, either demand from biofuels or demand from other domestic sources. Now, on the soybean side, we expect no changes from the USDA, and that comes despite President Trump's post yesterday on Thursday that China could buy up to 20 million metric tons of U.S. soybeans, up 8 million metric tons from the 12, that they agreed to. Should be a pretty quiet report on the soybean side. Yep, that's it from me.
Okay, thank you, Jack. Mary Kate, turning to corn. We continue to see very strong demand for U.S. corn exports. Are you expecting USDA to make any changes on their forecast or anything else that we're expecting for this report?
Yes, that strong demand that you mentioned, Anna Maria, is referencing that weekly export sales data that we received a couple weeks ago. That was at the end of January that U.S. corn export sales reached a marketing year high. That was close to 4 million metric tons. And it's key there that it was at the end of January because that followed the January WASDE report release. So we are expecting the USDA to factor that into their February WASDE report decisions. And we could see that the USDA will end up ultimately raising their export forecast in response to the very strong export sales seen in the weekly export sales data. In addition, we also now have 3 months of census data so far for this marketing year. And that census data has come in well above the 5 years range of data so far. So all of that together is pointing to an upside to the USDA's export number. And so it is very likely that we will see the USDA adjust their corn export forecast higher in this upcoming report, probably just to a mild to moderate degree, as we typically don't see them make huge adjustments in this February report. In addition, we are also anticipating that the agency will lower their corn use for ethanol forecast in this February report, just because the last several reports of the grain crushing data have shown lower corn used for ethanol, about steady year over year, whereas the agency is currently forecasting a strong increase in corn use for ethanol year over year. So altogether, those reports are suggesting a slight downside risk to USDA's corn use for ethanol number. So overall, those changes would be offsetting, ultimately resulting in a slight reduction to the agency's carryout. But overall, still a pretty quiet report anticipated for this February WASDE on the corn front.
Thank you, Mary Kate. Aaron, turning to U.S. wheat. We experienced extreme cold conditions here in the West last week, and there was some market concern about potential losses on wheat areas. What is your expectation for this report?
Yeah, starting with the cold weather in the U.S., we're not too concerned about that. We see very limited downside to our production, and we're not planning to make any changes to that until March at the earliest, potentially even April. Last year, the U.S. also had a similar cold snap, and we had above trend yields. The only state that we're watching a little bit closer is Nebraska. They had the longest time with wheat exposed to cold weather without snow cover. And then we also saw their condition ratings dip at the end of January. So we're keeping an eye on there, but overall, not too concerned about the cold weather in the US. Turning to the WASDE report, we're expecting a pretty quiet report overall. We see a slight downside to USDA's current food use estimate based on the recent flour milling data, just a little less wheat usage than we had anticipated in the most recent report. And we're also expecting a moderate increase to exports. We thought USDA could have raised their export forecast in January, to be honest. We have seen strong sales through January as well that continues to offer upside to USDA's export forecast. So we're looking for a moderate increase there as well. Taking it together, we're expecting a moderate increase in use and a moderate decrease in USDA's forecast carryout. But overall, generally small changes, and we're not expecting a large price movement from this report.
Thank you, Aaron. Thank you, everyone. That's all for today. We're going to be here next month discussing our expectation for the March report. Thank you.